So welcome, Superintendent.
Superintendent?
Over breakfast this morning, I had an idea, which was I really wanted to come up with an analogy for, in our little world of financial services, what would be akin to, a previous old guy superintendent interviewing the current superstar superintendent. And so I said to my wife over breakfast, I'm thinking sports analogy, maybe football, like Terry Bradshaw, Josh Allen. And then I'm thinking, no, it doesn't really work. Maybe basketball, baseball. And then I figured it out. And I said,
Are you worried about that?
It's the world of music.
Okay.
And I decided it's akin to Madonna interviewing Taylor Swift. I thought it was perfect. And my wife looks up, we're having breakfast.
Who's amazing, by the way.
Who's amazing, and
amazing.
She says, you can't do that. And I said, why not? I've thought this through. I think it's fine. And she says, it's incredibly insulting to Madonna. I said, okay. And then she walks out of the room. I hear her yell from the other room, ask ChatGPT for a better analogy.
For a better analogy,
so
there you go.
That brings us to where we are today.
We are.
But thank you for being here. Why don't you just give the crowd an overview of kind of what DFS does under your leadership and how you got there.
Yeah, absolutely. So I started my career at Sullivan and Cromwell, fielding lots of subpoenas from this guy and his stuff. That was my introduction to DFS. Spent several years at S&C doing financial regulatory work before then going to the U.S. Treasury Department in the Obama administration as a senior advisor to Sarah Raskin, doing cybersecurity, Dodd-Frank implementation, GSE reform. Then they brought me over to the White House as a special assistant to the president to manage the financial services portfolio. Started doing a lot of fintech work, distributed ledger work there as well. And then when the administration ended, was so fascinated with so much of the fintech work that had happened, decided I was going to move to San Francisco and be part of that ecosystem. I'm very much an East Coast girl, I learned, but started a company, had some great success with that, took it public, spent some time at the University of Michigan teaching financial regulation, sitting on a number of boards, swearing I would never come back into public service until the current governor called me and asked me to take this role. And she and I just had this wonderful vision for how to continue the work that Ben started when the agency was created about sort of a balls and strikes. There we go. There's a sports analogy. The balls and strikes financial regulator, right, that can protect consumers and markets, but also be good for business in the financial capital of the world. And, was just really taken with what her vision was and what I thought could be done with the agency. So we oversee state chartered banks and credit unions, about 15 GSIBs, 120 foreign banks, insurance across health, life, and P&C, crypto, thanks to Ben, money transmission, student lending, mortgage servicing. We recently got authority to oversee pharmacy benefit managers. So sort of you name it falls in the purview.
Great. Let's switch to AI now, since that's the topic of the day. And I, worked at DFS in AI was around, but not really, a pre-AI era. How are you seeing, let's start big picture, financial services being impacted from your seat by AI and large language models?
Yeah, I think like so many industries, and I should say one of the things I think is so cool about financial services, right? And this will come back to AI. There's nothing in the economy, hospitality, transportation, agriculture, that works well if the financial services layer of the economy is not working well, right? There's no industry that doesn't require banking and insurance and capital markets to do what it does. And so it's really important that layer work well. And I think as we think about AI, watching how it's going to transform that layer is going to have implications for everything else above and beyond the direct implications that AI has for all these different industries. I think what we've been seeing is companies proceeding cautiously, but I think the great thing about financial services is so far I don't know that we've seen people really deploying AI for the sake of AI. I really think, when we have our conversations with executives in different companies, that they have identified a problem for which AI can create a solution rather than sort of leading with AI for buzzwords' sake. And I think that's going to be really important for the industry.
And if we can, just drill down a little more on banks and insurance companies, which I know is the bread and butter of what you regulate and wake up thinking about each day. From my vantage point today, you're sort of seeing this steady drip or seeping into kind of the seams of everywhere in banks and insurance companies. Are you seeing that and how does it impact how you think about regulating those entities?
Yeah, absolutely. So let's take the insurance side, because I think it presents some easier examples in lots of cases. And we've done some guidance in this area. But you certainly see AI in sort of claims management, claims adjustment, certainly in customer service, increasingly in underwriting. I think financial services companies, like lots of folks, have to grapple with the build it, buy it sort of thing, right? Do you use somebody else's model? Do you want your own models? The banking side, I think it's been maybe a little bit slower adoption than the insurance folks. I see them being a little bit further along. But similar use cases, the underwriting certainly, less so far, I think, in the compliance area, although we're starting to see that come more online. As we think about regulating it, I think, and this is the same with any new technology, is what are the existing principles that still apply, right, that are technology agnostic, that we think fit what's going on? And then what are the new requirements, nuances, questions, right, that need to be layered on top to make sure we're addressing the particular risks presented by AI and different types of AI. So, when we did the insurance guidance for underwriting and pricing, and I think that's the other piece, is AI is so big. We said it doesn't make sense to talk about how you regulate AI in financial services. You really have to find narrow slivers. So we said for insurance, let's talk about underwriting and pricing first. We said the standard principles of anti-discrimination, or what we call in insurance, right, not unfair discrimination, those principles still apply. And then the question is, well, then what does that mean in the context of AI? Because it's one thing to say you still can't discriminate, with AI, but how do you do that? And we really try to make all of our guidance actionable and practical. Those are two words that the team is tired of hearing me say all the time. And so we said, look, it means that you have to be able to test the models. It means governance frameworks. It means that just because the model came from a vendor or a third party, you cannot absolve yourself of responsibility for the outputs of those models. So we really tried to drill down and say, standard framework, no unfair discrimination in underwriting and pricing, but here's what it means in this context.
Got it. So it's very interesting to hear, though, that insurance, at least from your perception, is sort of maybe running a little ahead of banking, which is kind of often the reverse of what you see. So that's fascinating. You mentioned compliance, and you're not seeing it there as much yet, at least surfacing. My view is it's coming. It may be below the surface for a long time. It may be kind of like a duck where there's a lot of paddling under the water and everything looks smooth on top. And can you react to that idea that AI is kind of coming for compliance and if handled correctly, could make it a lot more efficient?
This was a long time ago, because I was still maybe in the White House. The UK was working on this project around machine readable and machine executable rules, right? So, this was like really early days of the technology. And ultimately, they had a change of leadership. And so the pilot never really went anywhere. But I think fast forward to today, right, that's where the compliance place is headed, right, is where you would have machine readable and machine executable regulation. And we can think about that in the context of smart contracts, right, or of generative AI and agentic AI more generally. And so I think that's ultimately sort of where this goes. I think the important piece will be sort of the testing, the quality control, making sure these things are human in the loop, right, especially when you think about the consumer compliance pieces. But I don't think it's far off. I just think the risk aversion there is maybe a little bit greater than in some other areas of the business.
Got it. You mentioned the EU, so I can't resist sort of asking this. We've seen in other areas, especially in the world of digital regulation, that the EU has sort of led globally at times, had different norms. And so you have GDPR, which then eventually a lot of companies say, I need to comply anyway, I might as well start doing it. And then it starts to become a norm here in the US. Do you see that potentially happening with
Yeah.
with AI and kind of the norms around how AI is used?
Yeah, I mean, I think the EU has obviously been very quick to legislate around, regulate around AI. I think this is always the tricky thing for a regulator or a policymaker more generally when you're talking about new technology is you don't want to front run and stifle what could otherwise be productive and responsible innovation. But often what happens is you have the opposite, which is the policymakers lag so much that the norms that set in are harmful ones, or a lot of consumer harm happens, or something detrimental to the system happens. And it's a hard balance, I think, to strike of how do you stay close in time to the innovation without front running them in a way that's counterproductive. I think there's obviously lots of arguments, right, that the EU front ran and was too prescriptive too early, and that sort of stifled innovation. But then you think of a thing like crypto, and there's been so many complaints that the US government was so far behind. It took them so long, right? They've just done Genius in the last couple weeks or a few weeks. The markets bill still seems like it has a long way to go.
Yeah.
And so I think the trick is trying to find that balance. It's one of the reasons why we really try to use all of the regulatory tools we have, right? So there's the rulemaking, there's regulatory guidance, which right often is not a requirement per se as much as here's how you should think about applying the rule in a new and evolving context. And then there's all kinds of other software tools that I think regulators maybe don't use enough, right? The FAQs, the webinars, the white papers, when you need to an enforcement action to then inform how a rule should be applied in a quickly moving space. And so I'm a big proponent of the foundation is the rule or the law, but how you execute on it is really the important piece for making sure a regulator can keep the proper pace when it comes to innovation.
You mentioned the Genius bill and stablecoin bill and the market structure bill, the Clarity Act. So I can't resist kind of asking a Washington question, just broadly, maybe stepping away from AI for 1 second, but feel free to bring it back to AI. How are you, obviously a lot of change in the last year in Washington, different attitudes towards regulating, different regulators. How are you positioning, to the extent you can tell us, DFS, and how do you think about the role of the state in light of all those changes in Washington?
I can't resist. We had a great head start because of you putting in place the bit license framework, right? And that was 10 years ago.
2015.
Yeah. So New York was way ahead of the game because of the work that you had done. And then for me, it was just about, okay, how do we think about a new context, right? You were so ahead of the game because the digital asset space was just much different then than it's even become in the last year. So we've now done 9 pieces of regulatory guidance, including stablecoin guidance, blockchain analytics guidance, guidance for our banking institutions that want to engage in virtual currency business activity, which is the term of art we use here in New York. So we've now done that work. We've also built a team of 60 people that are devoted every day to this. So I'm pretty sure it is still the largest regulatory unit in the world devoted to virtual assets. But the Genius Act, so if you look at the Genius Act, it's almost a copy and paste of the stablecoin guidance that we did 2 years ago, in that it requires one-to-one reserving with cash and cash equivalents. It says a reasonable redemption time. We require T+2 redemption time. And I think that's a reflection of our deep engagement over 3 years with Congress, House and Senate, Ds and Rs, saying like, we know what good looks like, because in New York, we haven't allowed any algorithmic stablecoins. We haven't had any entities go bankrupt, right? We didn't license an FTX and a Voyager and a Celsius. And where we've had problems, we've been able to address them through the tools that we have. And so what you see in Genius, and I think what you see in Clarity and some of the other market structure bills that are coming out of the Senate, is really a nice hat tip to the New York framework.
Yeah, I agree with that. Although I'll admit that I occasionally get asked, what would you do on stablecoins, or what would you do related to this? And my reaction is usually, when we did the original bit license, Ether didn't exist yet.
Right.
So don't ask me about all this complicated stuff. We had very simple mandate back then. You do a lot of work around cybersecurity, and that obviously collides with AI. Can you talk a little bit about that and that intersection?
Yeah, so we just amended the cybersecurity reg for DFS, affectionately known as Part 500. It had been 6 years since it had been updated. So in that space, right, it was really overdue. The amendments focused a lot on tailoring because we have GSIBs on the one hand and very small insurance brokers on the other. And so it needed to be a reg that could fit all of the diversity of institutions we regulate. It focused much more on governance. When the original reg was put in place, multi-factor authentication was really expensive and cumbersome to implement. Today, you can basically do it for free, right? So there were just requirements that needed updating. But then we did guidance on AI and cybersecurity. And we really went through a lot of trouble to highlight both the pluses and the minuses to say, look, AI enhances the cybersecurity threats quite a lot, right? You can engineer a threat that used to only be the capability of a nation state if you are now one person with AI, right? So that really changes the threat velocity and the frequency. So you need to be aware of that. On the other hand, we said to our institutions, you should be thinking about how you use AI as part of your defenses. There are real opportunities here for detecting anomalies in your system, breaches, right? Thinking about data recovery, all of those things. And so we really tried to strike a balance between laying out some important principles, some important rules for our companies to think about. Yeah.
I have two final questions relating to AI use by the government itself.
Oh, yeah, absolutely.
We've talked a lot about what's happening in the markets and what companies are doing, but have you started to think about using AI yourself internally, and how is DFS doing that?
Yeah.
Where do you think that's headed?
Yeah, so we are in year 2 of a $60 million tech transformation that includes a lot of AI capabilities. So there's a couple of things we're doing. We've been piloting a very cool chatbot, which for the industry is maybe not so fancy, but for government it is.
I'll be calling it.
But that allows a user to come in and say, do I need a bit license? Right? And it could ask you some follow-up questions, answer you, point you to the statute and the reg. So it actually allows for some more maybe complicated questions. We're doing a very cool project with the University of Albany where we're looking at a treasure trove of weather data that they have, combining it with both insurance and mortgage data that we have, and thinking about climate risk and insurance redlining and mortgage redlining, and what does this all mean as insurance becomes sort of more expensive and harder to come by. I think folks forget, it's easy to think about when you're downstate, but about 80% of New York's population is coastal, right? So this is, and I talk to my colleagues in Florida and other places, but then I remind folks, New York, we have hurricanes, we have blizzards, we have tornadoes. We've now had a couple of earthquakes, which are often climate related, even though we don't think about that. So we have all the disasters here. So putting this weather data together with insurance data and mortgage data, I think in collaboration with SUNY is going to allow us to draw lots of interesting supervisory oversights. And then we're piloting some AI tools to just help with the workflow, right? Often we get submissions from companies and the team will have to spend a lot of time going back and forth with the entity saying, is this submission complete? Before they can even get to the substance of the submission. So now we're working on tools that could review submissions for completeness, do the back and forth with the company to make the file complete, and then preserve our team's talents for the substantive review.
Got it.
Yeah.
And my final question is really about, we talked about how you're using AI now. I want to just have you, if you don't mind, speculate on the future. And hopefully you'll be there, another 10 years, but even if you're not, where it's all going. And my question is this, I've increasingly come around to the view that as AI continues to seep into the work that all your regulated entities do every day, that's inevitable, and it's going to be very holistic, I think, sooner than we realize. It also seems inevitable to me that the act of regulating those AI-driven regulatees is going to have to be kind of AI-driven in part as well. And so my question is, do you think that's a future we could see, A, and then B, more specifically, can you envision a world, this is the one I think could be really interesting, but you could have, for example, a bank examination, which is your bread and butter, what you do every day, or an insurance company examination that really ends up being a lot more efficient, and it really ends up being, hi, this is my DFS AI. It would like to meet your compliance or your regulatory AI. And the two AIs get together. How you police that is a question, and you basically have a bank exam AI to AI.
Yeah.
Can you just comment on all that?
Yeah, no, I mean, I think that is not an unlikely future, or at the very least, right, there's some basic information that happens, that trades hands at the beginning of any exam. And I think, again, in terms of efficiency, instead of the examiner going in and spending the first however many weeks and months information gathering, right, the AI models could do that and then arm the examiner with more pointed questions. So rather than it taking 6 months for the examiner to get to a place where they can go in with very specific questions, right, you do that on day one. I think the other area where it could be really interesting and helpful is on the remediation side, right? So usually examiners go in, they write an exam report, it points out, right, all the issues that the institution is having and say, you are expected to remediate this in a certain time frame. We look for that remediation to then be sustainable, but you can imagine a world where you're deploying technology to have status updates on that remediation that don't require the person to do it. But I think all of this, right, if we think about bank call reports, right, and all the data that we get quarterly, right, and we saw this, I think, in the 2023 banking crisis. We certainly saw it in 2008, but even in the more recent banking crisis that we had, the data was so stale, and we wrote about this in the report we did on Signature Bank. The bank's inability to report to us the value of the collateral they had available to pledge to the Fed in that weekend of crisis was really about systems, right? And how slow they move and the cadence at which we collect data. So you can see something, even like a crisis moment, being that much smoother, right, with better technology and AI.
Yeah. It almost sounds like you could potentially have a monitor in a company that needed it. Rather than have an expensive monitor, it could literally be an AI system that is tuned up with what you're doing.
I think there's lots of good potential for this technology in the regulation of financial services.
Well, thank you very much for your time. I can just say, as a matter of personal privilege, it's so great to see what you're doing at the agency, and thank you so much for taking the time today.
Well, that means a lot coming from the OG.